Time now for Futures in Focus. 10-year Treasury yields hit 3% this morning, their highest since August 2nd. Let's go to Oliver Sloop of Blue Line Futures, who's at the CME. So, Oliver, we tested that 3% mark. What brings us back up there?
Well, Oliver and I switched out. This is Bill Baruch, president of Blue Line Futures.
Sorry, Bill.
We've seen... It's okay. We've seen some actually soft data this week from CPI missing. Well, you may not want to call it a miss, but it was soft. It came in slower than expected. And retail sales for the month of August was slower than expected. But they did revise the July number higher. And we're seeing yields move higher this morning. And really, we're trying to make sense of what it is. You had a lot of supply hit the market this week from auctions, the 10-year and the 30-year. And the U.S. is putting a lot of that supply out there to fund the debt. And that's what you have more supply, and you need buyers for that supply. And one theory that I'm coming with here is we saw Treasury prices, futures, rally in the middle of August when there was news that the U.S. and China were going to open a new round of talks with low-level advisors. Now, the market rallied on this, which means yields fell off. And then as soon as those talks yielded nothing, then we saw the prices fall and the yields start to rise. So I'm wondering here if the market is leaning on the fact that China is going to step up to be a big buyer if we can figure a trade deal out. The same sort of way that you see gold under pressure because the dollar is a safe haven. Really, what it's come to is the dollar is the place to be if there is a trade war, and nothing else is finding much value. So right now, it goes back and forth, and we're relying on headlines. What's going to be the next move on trade?
How much does it depend on where the dollar goes? The dollar seems to be trading a little independently of treasuries these days.
Well, right now, I mean, if you're watching the dollar index, and the near-term indicators I'm looking at, 94.75, 94.90 on the September contract, basically right where we are right now. We get out above there, you close above there on the session, then some of that near-term bearish momentum we saw this week on softer data is going to flip back to become a little more bullish in the near term. I don't think the dollar in the longer term holds these gains. But remember, the dollar index is 57% the euro. What you really want to watch is the Chinese yuan. The Chinese yuan is 685 on the dollar right now. And you need to see this Chinese yuan get back down to about 660.